Hello and welcome to Execunet TV. I'm Robin Greenspan, Editor-in-Chief of Execunet, the private business network for global business leaders. I recently spoke with Mark Anderson, President and Chief Economist for Execunet, about the current state of the economy and what we can expect for the rest of the third quarter and through the balance of the year. Here's some of his perspective. Mark, the headlines often take us on a roller coaster ride as they shift the daily economy stories back and forth between negative and positive. So where are we now? Has the economy stabilized?
Well, everyone saw the August job reports, and the loss in jobs was much slower than it had been, and unemployment actually declined. When we look at the executive employment marketplace, we think the perspective is even better than that. Last March, we predicted at the bottom of the recession, as we look at it now, that the job market for executives would start to improve in the third and fourth quarter. As we move into September now, we're seeing that progress, and it's actually better than what we predicted last March. And so we're positive on the overall marketplace.
Mark, what makes you think it will be stronger than expected?
Well, the good news from an economic perspective is consumer confidence has improved, and it's above levels of last year. We also have seen investor confidence improve, and the stock market is up 50% from its lows earlier this year. We're seeing interbank lending rates that are, the risk premiums demanded are much more normal and at levels we saw in 2007. World economies are also starting to rebound. Germany and France are seeing positive GDP growth. Our own GDP growth was projected to be down 4% in the second quarter, and recent numbers indicated it was only down 1%. All of this bodes well, and with low inventory levels, we really see there's no place to go but up. If you were going to say put a frame around it, you'd say the old ceiling is now the current floor, and that's all good news.
So the recovery really is imminent.
We think it is. It's no longer a question of will there be a recovery, but how big it will be. The economic projections of GDP are definitely higher than they were, and that's a good sign. But the type of recession that we had, we would have expected greater growth coming out of it. So it's not going to be a robust recovery or a hockey stick recovery, but we expect solid growth throughout the rest of this year and into 2010.
So what does this mean for the executive employment market?
We really have been following that since the last recession, and we saw the same levels of recruiter confidence or lack of confidence at the bottom of the 2003-2004 recession that we saw earlier this year. We now see recruiter confidence up at the 50% level, which for us means there's probably going to be some expansion in the economy and the employment market as a result. We talk to recruiters and companies every day, and they're telling us the nature of the marketplace is improving. They're seeing greater long-term expectations of hiring, and that's all giving a bullish tone to the recovery in this fall.
Are there any particular sectors where there's going to be some strong growth?
We see the same strength as we saw in March, or predicted in March. Healthcare, pharmaceuticals and medical devices, energy, the green, clean technology are all going to be strong areas. We're seeing surprising growth in manufacturing, and we've seen our jobs increase over 20% over the last 2 months, and that's a good sign that things are recovering.
So what does this mean for executives who are searching for a new position or have put off testing the waters because they were waiting for a recovery?
We really think the time is now to take action and start building the relationships that are going to lead you to your next opportunity. As we've said before, companies are always looking for A players to replace their C players, but we think demand is increasing. And so if you've been on the sidelines wondering whether things are going to get better, it's the type of thing that you ought to start getting prepared, because those who are prepared are going to succeed as we see the recovery take place.
Great, Mark. Thanks a lot.
Thank you.